Hi, everyone. My name is Peter Gross from AXA. Welcome to this session where we'll be discussing how incumbents and startups can help to advance insurance in really a challenging environment with all the new kind of digital infrastructure and rails that we're all looking at. It's going to be a fascinating conversation. I'm looking forward to it. And I'm joined today by Dustin Walsey, who is CEO and co-founder of Buckle. Buckle is an insurtech focused on providing financial services and products to the shared economy. Starting with insurance, they've rolled out and are growing across the country. So, Dustin, would love to hear about Buckle, your experience, and really this question of how you believe that incumbents and startups can work together as insurance becomes, kind of moves on to its next phase.
Yeah, thanks a lot, Peter. And thank you for attending today, everyone. Also, Peter, it's great. I'm from Atlanta, just like you. And it's great to see great technology, great companies, great people in this amazing city of ours. So I think as you kicked off, Buckle is a financial services platform that focuses on insurance, credit in the form of vehicle leasing, and advocacy for people in the gig economy. So very specifically, what we do and what we have realized is that the gig economy worker is representing the new and the evolution of the middle class. These people that work in the gig economy, they're teachers that are doing an extra side hustle. They work at the CVS and trying to make a little extra money on the side. And they're using this money, whether it's to pay for their education to better them, maybe something for their child, maybe getting a nicer vehicle. And our goal is to empower these people. It's to help these people achieve economic freedom by advocating for them. See, what we realized, especially now after COVID, that the gig economy worker is the frontline worker in this war during the pandemic. And they're the people that are supporting us. They're delivering our food. They're delivering our groceries, our prescriptions. And thankfully, they're out there helping us. And our goal is, if we can help them achieve economic freedom through advocacy, by getting them an insurance policy that's a little more affordable at a deductible at $500, that gives them the peace of mind that their asset is being protected, that if they get into an accident, they know it's going to get fixed and they're back on the road earning more income. If we can help them buy a nicer vehicle, that's a safer vehicle, that they can build equity into that vehicle that enables them to earn money, we're helping this customer. So our whole goal at Buckle is to help people achieve more economic freedom. So that was the basis of starting Buckle. And we realized this through working with the transportation networks, the TNCs, and all the DNCs. So we're live in Georgia today. We're rolling out across the country in 2021. And that's a little bit about Buckle. But my background, though, comes from insurance in Georgia.
Dustin, just to kind of follow up on that a little bit, what are the myths and misconceptions of traditional insurance carriers about sort of the shared economy, about Uber drivers, Lyft drivers, that you guys kind of are exploiting to seize the opportunity that you have in front of you?
Yeah, it's really interesting. The financial services world, whether it's insurance or banking or whatever, it's personal or it's commercial, and there's no in between. And what Uber and Lyft did is they started blurring the lines in between. So what we understood is and figured out is, how do we build this hybrid insurance product, leasing product that allows for a hybrid situation where sometimes you can be driving personally, maybe you're driving your kids around, and sometimes you could be on an app driving for Uber, Lyft, DoorDash, Postmates, and the like, and provide complete insurance across the entire experience. That is what makes Buckle work. And we figured that out. We understood it. I've been in the insurance business forever, and my partner's been in the credit business forever, and figure out how to marry those two pieces together, working with the various regulators to make that happen. And you look at the traditional insurers today and the traditional banks today, you either are personal or you're commercial, and you're never in between. So that's kind of the sauce and the idea that made it work.
And so looking at how incumbent carriers, like the company I work for, can work with startups, can work with the Buckles of the world. What are the kind of things that you're looking for as a CEO of an insurtech that an incumbent could offer you and help your business grow?
I would tell you the initial challenge in the insurtech space, very specifically, is providing capacity partners. So it's very easy to have an insurance idea. It's very difficult to find someone that's going to put the capital up to take risk. So Peter, like being able to work with companies like yourselves and all the other major reinsurance partners to be able to lay out a business plan, lay out data that's unique, and come to someone like you that will give capacity to insurtechs so that they can then write these drivers and do their unique business models is the challenge. Because I mean, it takes a lot of capital, it takes a lot of data, it takes a lot of technology, and it's just not easy. So convincing large reinsurance partners is a huge challenge for any startup, and it's especially difficult in the early days.
As you look at inspiration for Buckle, what are some insurtechs you really feel like are doing it the right way?
There's a lot out there. I think Lemonade's done some really interesting stuff. Hippo, as they've used technology to make it frictionless for people to get insurance, acquire insurance, and buy with very few clicks. You see, the challenge, what we believe at Buckle as well, is there's a lot of data out there that you don't have at your fingertips. And if we can grab that data, make it very frictionless for our drivers or our members to get a quote and sign up and purchase, it makes for an awesome experience. So I'm really impressed with companies like that have done that.
And how do you guys market? What's your sort of customer acquisition strategy?
Yeah, we have a couple. We have a B2C where we use traditional Facebook groups, word of mouth, getting in the backs of these vehicles and talking to drivers, which has been very effective. We also work with our distribution partners, to push their drivers to us because we really help them. So we have a B2C strategy where, a driver will open up their app and they'll see Buckle, go get a quote, and the driver gets pushed to us, and then we help, we sign up that way. And that's really lowered our customer acquisition costs. But the key is to really partner with these companies to help insure the companies, to help insure the drivers, and really address a lot of challenges that exist within the ecosystem.
What's the biggest challenge that you guys are facing now, other than sort of the kind of general economic situation that we're in? I'm going to ask about that next.
Yeah.
You look at a national expansion, you look at expanding into credit. I love the power of credit and insurance working together to deal with different risks. But what are the kind of things that are keeping you up at night as you see where Buckle's headed in the next 2 or 3 years?
Yeah, absolutely. Speed to market is everything, but doing it smartly, right? You've got to balance speed to market to loss ratio. We can't, write policies and lose money. That's just not our model. So being very conscientious of that, because as you asked earlier, protecting our reinsurance partners is critical to us as well, because they're helping us grow. The other challenge that really keeps me up at night is it's difficult in a very regulated business to expand quickly. So we have to deal with effectively 50 state regulators plus DC to roll out into these markets. So how to price it, how to underwrite it, how to get the rates, rules, forms correct, working with regulators, which we think are our partners, to make this product really work. So those challenges really are key things that worry me as we try to accelerate growth. Then the second piece, or the third piece, is really creating a relationship with the customer so that we can get these products to the customers who need them, who will then refer friends and help us grow that way. Because we believe that's the fastest, most effective way to get good customers.
From your website, it looks like you guys have some pretty significant cost-saving opportunities for drivers. The product seems like it would kind of sell itself a little bit. Are drivers surprised at the kind of cost savings they can get with you? And does some of them sort of maybe even doubt the product as a result of all those savings that you can secure for them?
Yeah, absolutely. The first thing the drivers are blown away with is we ignore credit. We don't believe in credit. We believe it's discriminatory. So we throw that out in the beginning, and our members, our drivers love that. The other thing is, once we throw that out, we're able to get aggressive within their pricing, and we price them smartly. And in the really beginning, they were blown away by the cost savings. But right now, the word of mouth is taking off in markets, and it's really helpful. And I don't want to say anything sells itself, but it definitely helps the flywheel spin faster. It helps the brand. It helps the amount of touches we need to have with a customer to close a deal as our community starts vouching for us. And that's been amazing success that we've had over the last few months as more and more customers have acquired Buckle.
All right, I got to ask the question, before I share a little bit about AXA, how is COVID affecting you guys? What are you doing?
Yeah, COVID was really scary. Obviously, it's scary to everyone. In April and May, we, like everybody, hunkered down. Rideshare dropped substantially, but that has come back, across the board. The second thing, though, that COVID has taught us is the gig economy is here forever and never going away as we change our behaviors. You see, people are ordering food more than ever. People are getting their groceries delivered all the time. Prescriptions and the whole yellow pages is eventually going to be dispatch. And now what I think COVID has proven is that the gig economy is here to stay. And our goal is to service those people and have them become members of Buckle, where we can help them achieve economic freedom. So COVID, while scary, has made the gig economy really, really relevant in all our lives forever. So Peter, thank you for all those questions.
Yeah, absolutely. So for those who are joining us, it's a bit of a strange conversation because we're moderating each other. And so, I'm going to share a bit about my work with AXA now on this topic, and Dustin's going to interview me a little bit once, to kind of further the conversation that way. And then we'll take some audience questions as well. I already see a few coming through. So if you want to get your question in, please do submit it in the chat, and we'll try to get to it in the session. So as I mentioned, I work with AXA. AXA is, depending on what measure you use, the biggest global insurance group based in France. Not a big presence in the US other than AXA XL, a big reinsurance vehicle that we bought a couple years ago. But a lot of, AXA's present in more than 60 countries with more than 120 million customers around the world. And I work in the emerging customers group within AXA Next, which is the innovation arm of the business. And AXA Emerging Customers is doing something really unique, I think, in the insurance space, which is to go after consumers who earn between $2 and $20 a day in income. And this is 4 billion people around the world. 30 or 40 years ago, this population really wasn't accessible. But with the rise in technology, especially mobile network operators, digital financial services, and indeed the shared economy that Dustin's already mentioned, AXA has found that we can get access to this customer base in a new way. And there's actually something even more powerful than that. When you live on $2 to $20 of income a day, you really need insurance because you're aware of risk in a way that Dustin and I simply are not in our day-to-day lives. If you live in Nigeria, in Lagos, city of 28 million people, earning $10 a day, hustling 3 or 4 different jobs, you wake up worried about what's going to happen that day. You go through the day learning about bad things happening to people around you, and you go to bed worried about what the next day is going to bring. Risk is pervasive and various for this population around the world, and so we've actually found that we've had to change the insurance value proposition and sales pitch completely to reach this market, and also the business model through which we serve them. So typically, insurance, at least outside the U.S., is delivered through sort of mandatory schemes like car insurance. You have to have insurance for your car through the mandatory schemes, or through employers. Individuals are not really making individual decisions to buy insurance on a voluntary basis at scale. And so what we did is to say, let's take this insight that people are exposed to risk, and let's take these rails, digital, mobile, and otherwise, and bring them together. So about 10 years ago, we launched a freemium insurance scheme in West Africa, which rewarded users of a certain telecom with free insurance if they topped up to a certain amount on that telecom on prepaid airtime. And all these markets are prepaid. There's really no postpaid telecom bills for about 80% of the world, really. And so what we saw was a 25% increase in revenue as a result of this free insurance provided as a reward for people spending with our telecom and not someone else. And then I expanded that to 15 countries around the world and got about 60 million people to buy their first insurance policies by choosing it voluntarily and qualifying for it by spending more with our target channel. So it's really a frequent flyer program in a way, but we used it in the insurance space, which was kind of a new usage because we found that this market specifically would react to the opportunity to protect itself against risk in a way that really I, as a consumer, would not do. And so we built the market that way. had to simplify the products, significantly in that process to make them not kind of 25-page policy wordings, but like 3 text messages, and that's your whole policy wording. To allow for document access, which is, didn't require sort of 9 or 10 government documents, but even a letter from a pastor who performed a funeral or an imam who performed a funeral. We had to reinvent the front office and the back office to reach this market, but we're doing it. AXA initially bought a couple of insurtechs in the UK to facilitate this model, and now AXA is kind of taking on the mantle itself to expand this approach to insurance in emerging markets, beyond just working with insurtechs. At the same time, the way that we've had to reinvent insurance, I think, speaks to what Dustin was talking about. That this risk is apparent, and insurers are not serving it, very well. And so, AXA as a group continues to look for and work with a variety of insurtechs, which really we feel are creating the insurance market of the future, a market where policies are simple, where processes are easy to navigate, where the user experience on an app isn't painful, much less a claim. Good Lord, claims are sort of expected now by consumers to be difficult, painful, annoying processes. That's not gonna last when customer-centric companies, the Amazons, Googles, and so forth, look more and more at insurance. And so we recognize that shift is happening, and we at AXA are trying to, modify our business in both a front office and back office way to meet where we think the market is heading. We think a lot of insurtechs are doing it the right way. So that's a bit of an overview of what we're doing at AXA as an incumbent, but trying to take a startup approach to this new market opportunity.
When you look to partner with insurtech companies, what's the key thing that you're really looking for within them?
It's a great question. So, good governance is going to start the list for us. We really, because we're big, we do face a lot of regulatory and financial risk, and so we really need insurtechs to be governed well, run well, and too often I think that's kind of an afterthought in a way, because you gotta go make money. You gotta prove the business out. I'm also co-founder of a startup called Chiraco in East Africa, so I know what that looks and feels like. But the incumbents need a solidly run, compliant company who respects the regulatory and other challenges that it faces. I think the second big thing that we look for is a key insight on a growing market. So Buckle's perfect actually. The shared economy, we believe, is going to grow, both for the reasons you mentioned, Dustin, but also because the idea of a single fixed job, has also kind of disappeared in the COVID context. 30 million people losing their jobs, everyone trying to pick up side hustles here and there, and the Ubers and Lyfts, et cetera, are only, we think, going to keep growing because people are going to be piecing together income from lots of places. So I think you guys are kind of, the pinprick on an issue that's going to keep growing, and we really want to find companies that have something unique about a growing problem.
Taking your micro insurance concept that's global, how do you bring that to the United States successfully? Where do we see that emerging in at home?
It's a great question. So I think traditionally the low income market, so there's 75 million Americans currently with medical debt. That's an incredible number, right? There's still 40 million Americans uninsured. 20 million more Americans on the Affordable Care Act. It's tens of millions of people, and what we find is that traditionally this market has been served by I would call it lower quality companies like payday lenders, for example, because you guys are in the credit space. Payday lenders are exploitative of 100 million people in the U.S. in our view.
Terrible.
What would happen when a good company with good products and services, with a UX that's just like what you see on Amazon or anything else, what would happen when that company would serve that market? We think they'd make a lot of money, but they would not. One of the things that you mentioned, Dustin, is that you guys, it's not just that you trust your customer by not looking at credit scores. You just realize there's other ways to evaluate a customer's quality than just FICO. And so, a company that uses those tools, I think, would be very effective in taking a very sophisticated approach to a large market that tends to be underserved.
Yeah, it's interesting with, you mentioned FICO. we just don't think FICO's right. I mean, things happen in people's lives, and they could be a one-off thing that ruins your credit score for years, and it's just discriminatory. And we think we can do better with that. And I think the world's a better place if we can figure out how to help people, break free of that credit score rule.
So how do you do that? I mean, I love that you set that up, Dustin. How do you just kind of throw away FICO? Two questions: what do you use instead? And two, why are balance sheets open to kind of working with your solution as opposed to the known commodity of FICO?
Yeah, I mean, so the first question is about data, and we use all different sorts of data sets that are out there, some public, some private, to underwrite in a unique fashion. You see, because in our theory, when people use their asset to generate revenue, they treat it differently. It's more important to them. So can we use things of when they're driving, how they're driving, where they're driving, how often they're driving, star ranking, things of those natures to create a better underwriting algorithm than just straight credit. And that is kind of the key piece. So we're out working with our partners, our drivers, to acquire this data to underwrite them in the most efficient way possible. From a second piece is, I think you're starting to see a social conscious out there in the world, and it's important to us that, companies want to work with people like us that are looking for new, innovative ways to help this segment of the population. And we've just had great success with partners, whether it's in the reinsurance markets, or the credit markets, that are willing to work with us and take balance sheet risk that makes this possible. And if we do this right, and our members understand the value that we're providing them and protect us at the same way, the whole ecosystem improves.
Agreed. Yeah. I mean, what I love about it is that you have tapped into a risk reduction mechanism, owning a car that is your business, that ideally means more efficiency for everybody, right? Like, that's the ideal, is to avoid claims in the first place, to have more safety, more security in general, and as a result, having customers able to benefit from that. One question from the audience for you, Dustin. As a small company, how does Buckle manage the regulatory challenges of managing 50 states' regulations?
Yeah, I mean, really good question. We invest heavily actually in compliance, hiring incredible people that are focused on that. What we have done is, in the early days, we started working with the regulators to create a product that's good for the driver, good for the passenger, good for Uber and Lyft, and good for the regulator. And because of that, we've just had great success rolling it out. So we're trying to be a friend to everybody and provide a win-win-win-win. But it is a challenge, no doubt about it. But it is something I think we're really good at. There is a question for you. How do you get consumers to trust you? Or AXA, your target audience has problems making ends meet already.
Yeah, so it's a really good question. One is by partnering with brands they know and trust. So, for example, telecoms in emerging markets. A telecom in let's say Africa is not like Verizon or Sprint or T-Mobile here. It's like Verizon plus Sprint plus T-Mobile plus Ford plus Tesla plus the DoD. I mean, they're just massive entities that dominate the country. By partnering with them and crafting business models that are in their own core business interest, we do leverage trust. But then we've got to back that up. So we've got to have a UX that's just as easy as it is to kind of sign up for a SIM card. We've got to have products that are simple to understand, just like the web settings on your phone. We've got to basically modify our business model to fit the phone. And that's, I think, the gift to us, is that it makes us be simple. And as a result of that simplicity, we're then able to scale. And then our back office processes are also streamlined, because we're working with millions of people at one time on one product with very small sums assured and very simple terms, which really, I think, enables trust to be built and kind of rebuilt in a way in these markets. It's a big issue that insurers have, this lack of trust. We've earned it, and we've got to fix it. And I think the customer centricity is the answer.
As we bump up against time, it sounds like you and I are working on common themes of, there's a huge underserved market out there for a variety of different reasons. And that if we can help them, whether it's through their telecom providers, their insurance providers, get better products and services, the world can be a better place.
I completely agree with that. I think that insurance is, like the most emotionally powerful product hidden under a stack of paper. Like we we had something incredible, and we just added complexity and friction to it over 100 years. And so I think that, we're thrilled to see customer centricity driving the 21st century economy, where products, services, messaging are all, really evaluated in real time by customers who can give you feedback like that 5-star rating right now. Insurers have been able to get away with hiding from that, and that's not going to last. Insurers will be changing, or someone's going to change it for us. At AXA, we're trying to get out ahead of that and realize that we do have this massive role to play in social benefit and in overall protection and in really making people healthier and safer. We're going to lose that opportunity if we repeat the mistakes of the past. Now, those business models evolve for a certain reason, but times have changed and we've got to change with them. So we're very aware of that and very eager to lead the charge and not just kind of be swept up in it.
It makes total sense. Within your organization, as you partner with insurtechs and young ones, what piece of advice would you give a company, myself, maybe even earlier stages, of how to interact initially with you and create a conversation to build, a relationship that could evolve?
Well, I'll do this from your perspective, Dustin.
Maybe that's what I'm asking from, yeah.
One is I would treat insurers like commodities, because that's what they're used to being treated like. And let them know that you're talking to various people who can provide you the same service.
Right.
Then be extremely, have your value proposition just super clear. I'm going to make money for someone. Is it going to be you or someone else? Because it's going to happen. These numbers, this data, this process, this access to market just demonstrates the viability of what we're trying to do. That's been the strategy that I used before I joined AXA, and it's still what I kind of like seeing when we work with insurtechs now. I think that the second thing is really not asking them to do too much other than rent you their license and their balance sheet. If you guys kind of solve the problems and just create the checks, that helps a lot. So your compliance teams, your policy wordings, your actuarial data. If it's just sort of delivered on a silver plate, I think you'll find insurers willing to take it. Of course, if you're doing it all, then the question should be, well, why aren't we just bearing the risk ourselves? And so the solution I had when I was in your shoes was to say, and this is different based on the state that you're working in, but if you guys can find a way to take some up or down underwriting risk in some way, just to show that your money is where your mouth is and you have skin in the game, I believe that's the way you're going to make money, but it's also going to get more confidence from the insurer's side to say, oh, they really back this. They're not just sort of taking an intermediary's fee and leaving us to kind of mop it up. So I found it to be a way to kind of grease the wheels and also end up making more money on the back end for us. But again, that's a different context that you're facing here in Georgia that you might not have access to.
It's funny. We are totally a believer in incentives being aligned. If it's good for the whole ecosystem, everybody can win. As we kind of bump up against time, is there anything else you want to add?
I'm grateful for this opportunity, and I'm really excited, I think, about the ecosystem that is slowly building in Atlanta. We process 7 out of 10 payments in the country. We do have, vibrant insurtech and fintech environments that are growing, but yet the community is still sort of forming itself. And so I would love to keep this conversation going, Dustin, with you and with others on this forum now, so we can keep, leveraging the assets that Atlanta has to create really phenomenal businesses, cabbage-like businesses, but in the insurance space in the years ahead. How about you?
I think it's such a great way to close out the segment. I am from Atlanta, born and raised, grew up here. My children are from here. And as the Atlanta technology scene, financial scene continues to evolve and the city grows faster and faster, I'm just so excited to be down here working and meeting and networking people like yourself. And I wish we were out here in person, and it would have been a fun afternoon, but Atlanta's a great place. But exciting times.
Absolutely. Well, Dustin, thanks for your time, and thanks everyone for joining us and participating and being interested in this question of insurtechs and startups. We look forward to continuing the conversation offline. Feel free to reach out to each of us on LinkedIn. Look at AXA.com, look at Buckle.com. Sorry, is it buckle.com?
It's buckleup.com.
Buckleup.com. There we go. And thanks everyone for your time. We'll kick it back to the organizers.
Be safe.